You're listening to Investify, preaching financial independence and assisting investors to achieve a more flexible and free lifestyle through smart financial planning and real estate investing. If leaving the corporate world and jumping into this thriving industry is what you desire, tune in and listen to stories of like-minded individuals who made the leap to financial independence. Equip yourself with the right tips and tricks to start your real estate journey, making active or passive ventures that are highly profitable and rewarding. Here are your hosts, Craig Kurlop and Zeona McIntyre.
What's going on, everybody? You are listening to Investify. My name is Craig Kurlop, aka the Fi Guy, and I'm here with my co-host Zeona McIntyre, aka Z Money. Z, how you doing today?
Oh man, it is such a beautiful day. We're like living inside of a snow globe here in Colorado, just actively snowing, but like just the tiniest of bits. So we woke up to just a blanket. And it's just really beautiful. I have not left the house, though, so that's my relationship with snow.
Yeah,
from a distance.
I was actually supposed to be in Denver today, and I woke up at 3 a.m. and rushed to the airport just to find that my flight was canceled. And so I rushed back home. So my miracle morning this morning involved a 1 hour, half hour there, half hour back drive to the airport. So,
well, that's not too far. That's kind of cool.
No, yeah, we only live 30 minutes from the airport. People think we're out in the sticks, but that's why we love our place, because it's like, feels like the sticks, but there's an airport 30 minutes away that kind of goes to some places, but Denver is one of them, thankfully. And yeah.
What's the airport right there?
It's Spokane. It's okay. I will never figure this out. It's GEG, but it's from Spokane. I don't know.
Interesting.
But yeah,
they just said, you get the random letters. That's it. Yeah.
Giga, Spokane. Got it. Yeah. So awesome. That's, yeah. So if anyone's ever in Eastern Washington or Northern Idaho, hit me up. I'm always happy to kind of grab coffee with people and you know, if they're in town. So, yeah.
And now you're licensed in Idaho, right? So did you sell Brandon Turner his house?
I did not. Brandon Turner bought his house before I was able to get my license. Not that I don't know that he would use me anyway, or I mean, we're like decent friends, but we've never done any sort of like real business together other than like working at Bigger Pockets. But we were hanging out a couple weeks ago. So when he's in town, we try to at least grab coffee or something like that. So it's fun seeing him around.
Yeah, I think that's sweet.
Yeah. But you know what else is sweet?
What?
Taxes. You know what we're talking about today? Taxes. Yeah. Okay. I know this is a pretty timely episode, but we got Natalie Kolodij. Natalie Kolodij. Natalie Kolodij. Yeah.
Yeah, exactly. You pronounce the K and then you mumble the rest. That's exactly what she says.
Natalie Kolodij. She is amazing. Literally a wealth of knowledge. You know, she's got a really cool story about getting into real estate a bit of a different way. That's kind of the first half. The second half, she goes pretty deep into some really easy ways to save lots of money. I'm not kidding. If you listen through this episode and maybe even listen through it twice and share it with your friends, you could save probably tens of thousands of dollars just listening to this one episode, because she names 3 low-hanging fruit that a lot of accountants that aren't real estate savvy don't know to look for. That could literally save you tens of thousands of dollars in taxes, especially if you own rental property. So make sure you listen through all the way to the end. And I'm not going to spoil any of the secrets right now. Let's bring Natalie onto the show. Natalie Kolodij, welcome to the show, my friend. And I probably did I say it right?
That was right. You nailed it.
That was right. Okay, yeah. I nailed it because you literally just told me 3 seconds before we got on. But you have some enlightening stuff to share with us today, and I'm super excited to get you on and learn all about taxes, the fun things things that everybody loves to talk about. But before we do that, why don't you kick it off and tell us where it all started and how you first heard about financial independence?
Yeah, for me, I was a business major, so I've always been kind of nerdy on anything finance related. And then for me, it dove heavy into real estate right out of college. That's where I found Bigger Pockets, and I started off learning through The Worst Way Possible, which was a weekend guru seminar, but that is what dove me into basically going down the rabbit hole of passive income and FIRE and real estate.
Awesome.
Did you pay $50,000 for this seminar or?
Luckily I was broke because I just got out of college. So I gave them all of my $3,000 and that was all I had to give. So small blessing on that one.
Yeah. And so it sounds like was it useful at least? Because there is some value in them. I would say that most of them are.
So for me,
smoke,
I feel like it was helpful in that it sort of opened my mind to things that were possible. But did I leave there able to do a deal? Absolutely not. But then that is what led me on to Bigger Pockets to try to find the missing pieces. So it all kind of worked out in the end, because that's really how I met a lot of the people I've dealt with since then, a lot of the great partnerships and people I know.
Sure. Yeah, no, that's amazing. And I think like those events and those conferences, that's where I started too. I first went to my first conference, started meeting people, like kind of drank that Kool-Aid, got the buzz, and you get on Bigger Pockets, and then the buzz continues. And, and so give us a little perspective on like what year was this when you went to that conference?
That was 2014.
Okay, so 2014 is basically when you're starting, and so then you go on, you find Bigger Pockets. How long between that real estate summit that you went to all the way until doing your first deal?
So time-wise, really, it was less than 6 months. But my first deal was a weird one because I started off flipping mobile homes. So that's where I landed what I decided to try first because it wasn't so big and scary.
Like mobile homes? Like
Nice.
individual mobile homes, not mobile home parks?
Flipping mobile homes in parks, yeah. So I was flipping them and then I would resell them on owner financing.
Oh, no way. Okay, so tell us a little bit more about that. Like, how did you
pretty
get
common.
into, like, why did mobile homes attract you just because of the low price point? And what area were you
That
in
was
when you were
exactly
investing?
it. Yeah. I was in the Seattle market. So the average home at that time was like $650,000. And again, I had just given my only $3,000 to that mastermind, that weekend seminar. So my thought with mobile homes was, well, if I'm terrible at this and completely fall on my face, at least I'm not out $600,000. So for me, it was a good jumping off point to get out of that like analysis paralysis and try doing something. And I feel like I learned a ton of the same basic skills. So I feel like it's a really good starting point that a lot of investors don't even consider.
Yeah, that's funny. I've never heard of anybody starting with mobile homes. And you make a good point. It's always like house hack, house hack, house hack, house hack. And me, I'm like Mr. House Hack over here. And so I'm really excited to learn a little bit more about this perspective that you brought. And so Z, you know what this sounds a lot like?
Yep. The for real deal.
The for real
Super
deal.
catchy, Natalie. This is the first deal that you've ever done intentionally or unintentionally. And with you, it sounds like it was very intentional. So why don't you dive in and tell us all about your first mobile home flip, how you found it, what you bought it for, how you purchased it, all the goodies.
Yeah, so the first deal that I did was a mobile home. It was actually listed on MLS for I think it was listed at like $38,000 or something like that. The owner actually reached out to me. I just had ads on Facebook Marketplace and Craigslist that just said, I buy crappy mobile homes, like any condition, email me. And so he sends me this listing on MLS and it was nice and it was above what I was trying to pay. And I was like, oh no, I'm so sorry. Like, I guess reach out when it's your last resort. And he was like, we're there. Like they had inherited it. They had been spending $900 a month in lot rent. It was in a 55 and over community, so they couldn't live in it. The realtor was dragging their feet because it was only a $38,000 sale. So they were just ready to be done with it. And so I said, okay, well, I will give you $8,000 if I can do $4,000 now and $4,000 in like 30 days, I think is what I said. Because I figured I could like resell it by then, fix it up, resell it. And he says, okay, what about if you just bought it now? And I was like, I will do $6,000 if you'll just sell it today. And so he's, hold on. I can hear him like mumbling, talking to the wife, comes back. We'll take the 6. We just want to be done. So it was I bought it for $30,000 under ask for $6,000, having no idea what it would resell for. But I figured for $6,000, like I could do something with this. So that was my first deal. And it was in a really nice park. That was kind of like a gated community, like swimming pool, all the mobiles matched. It was great. Just happened to be manufactured homes.
Wow,
Zeke?
that's incredible. I really love those 55 plus communities. They can be some really nice ones. So, yeah, I think when people think mobile home park, they think really run down, but those are fancy. So, okay, how much did you actually have to do to it? Because fixing up a mobile home is not the same as fixing up a house. It's kind of funky.
Yep. Yeah, so this one was like pretty nice when we got it. They had already fully replaced the kitchen. So the kitchen was nicer than like most of my apartment kitchens had ever been. So really all we did was a ton of paint. Like everything got a coat of Kills primer, and then a nice paint on it. And we updated all of the fixtures, and we just like, it just got a facelift pretty much. I think we only put like $2,000 max into it.
When I think of Kills, I think of smelly. So was it like, was there like smoke odor or animals or something like that?
Good question. It did not smell bad. Mobile homes are
That's good.
weird because they're never made of real building materials. So everything in there is like paneling or like a plastic coated. It's like if you had a hybrid between cardboard and drywall, that's what the insides are made of. So you have to be really careful with what you paint over them first. Like you'll see people try to patch and paint the like wood paneling. They're like, oh, we just caulked the seams and painted over it. And that will 100% not work. Like that always separates again. But if you're just going over the flat walls or like the bathrooms, they're always this like, it's not normal walls. So anything that sticks better is what you want in a mobile home.
Well, so how did you know all this, right? This feels like something that a newbie wouldn't know on your first deal.
Bigger pockets. It was a combination of me
Really?
asking questions online and then trial and error. Like we learned about painting over the bathrooms it was like the drywall had built-in wallpaper almost. Like it was like a one-piece thing. And we learned the first time by trying regular water-based paint and then it just like peeling back off. And we were like, oh, that looks wrong. So then we kind of went down that rabbit hole and Googled what sticks to wallpaper, what sticks to kind of water-resistant materials.
Wow, that's
Very cool.
incredible. And so like let's just like reflect on these numbers for a second. This thing was this might be like the most under asking from a percentage basis I've ever heard of. So 38,000 was the ask. You purchased it for 6, which is basically like 85% like off. So like you basically like what a down payment would be for most people, you purchased this entire home for. You put $2,000 into it, and so now you're all in for $8,000. And so tell us the end. Tell us what's the final chapter. How do you get rid of it?
Yep. The biggest mistake we made in the cost that kind of we weren't expecting was holding costs. Because it was a nicer park, we were like, oh, this is awesome. This is a beautiful park. The nicer parks have much stricter requirements for living in them. So it was harder to find a qualifying tenant because they didn't just have to be able to buy it from us. They had to meet the park's credit requirements and job history. They screen tenants, same as like an apartment. So even though you own the home, they still have to meet that requirement. So that took a few months. So that was 3 months of holding at $800 a month. And so that was another almost $3,000 in. And then I think we ended up selling that one for like 28 or 29 on owner financing. So then there was also some interest on top because we carried the note on it.
Okay. So how do you negotiate that? How do you negotiate carrying a note, and why did you want to go that route versus just getting all the cash?
Yeah, it's kind of tricky to get financing for a mobile home. There are some places that do loans on them, but not a lot. So if you're in a position where you can do that, that's what I would typically recommend, because then you're not just making the selling price, you're making, 9% interest, 12% interest, whatever's reasonable on top of it. And typically it's only just like a 5-year note. It's priced like a car, right? So I would just structure it after a car amortization. So after that mobile home, and on that one, I also didn't pay for it either. I had a coworker who I'd been talking to about real estate. I went to school with him. We ended up working at the same CPA firm. He overheard basically the whole thing. And so that was his like $6,000 to buy it. And we just paid for renovations. So that was great in that element too. The next one that we did was one that same thing. I actually on this one I had a search set up that just notified me of any mobile homes within like an hour for under 10 grand. And there was one listed for free, literally for free. So I went and checked it out the very next day, and it was in rough shape, but livable. Same thing. It had been inherited. She was tired of spending money on it, just wanted it gone. So I gave her $50 to make it a legally binding contract. So the next one I bought for $50 just outside of Seattle, Washington.
That
Amazing.
is so crazy. Oh my gosh.
Yep.
And that was on the MLS.
That one wasn't on MLS. That one they listed
Oh.
on like Craigslist for free. She just wanted it gone.
Man,
That is so cool.
absolutely nuts. Yeah, and so so tell us how. So that seems like a pretty easy negotiation. There's really not, you can't really negotiate down anymore.
Yep.
And so
I negotiated
you
up.
make the $50. Yeah, you're like, I guess I have to pay you $50. Please take my money.
Yeah.
And so tell us a little bit about this one. Like, this one seems like it's a little bit more of a rehab. And so what did you do to it?
Yeah, it was more involved. And this one, I literally bought it, signed the contract with the lady. An hour later, I put my sign in the window that said it was going to be for sale by owner. And less than 2 hours later, it was sold. Like, I had just bought it and someone rang the bell and was like, I've been trying to find anything where I can live in this area. The cost of living's so high, but my daughter and grandkids live out here and I'm retired. So I'm just trying to find something affordable. What are you selling it for? She was like ready to buy it that day. And when I told her we were going to be renovating it first, she was like thrilled beyond belief. So then she asks me, though, what are you going to sell it for? And I was like, I don't know. I've only owned it for an hour and a half. I have no idea what I'm going to sell this for. So I kind of came up with a price like just offhand. And this was an older one. It was small. And I think that one we sold to her for $17,000 with a 30-day window, basically. So it was pre-sold within 2 hours. I had 30 days to fix it up and turn it over to this lady.
Wow. And so did she just buy that cash, or did you do seller financing on that one?
She just bought that one cash, actually.
Okay, cool.
Man, the power of just having like ads in the window. I love that. But okay, so what did you do in 30 days? Because that's a pretty tight window and you have a job. So were you just like hustling?
So on that one, it needed more done to it. It needed a lot of new subfloor and new flooring. It needed like a bunch of drywall torn out. It needed like some plumbing repairs that had caused some mold behind the drywall. And so we hired a contractor who ended up halfway through, we had to fire him because he did awful work, like tore down a wall to replace the drywall, but then closed wires into it loose that shorted out half the house, and we had to get an electrician. So we ended up dropping him halfway through our 30 days. So then the last 30 days, it was my best friend and I, and we both worked full-time jobs. And so we'd work all day, and then we'd go work on this home ourselves from like 6 to 10 or whenever it turned into quiet time. And we ended up doing drywall in that. That's where I like learned how to do drywall. Did all new subfloor, did all new flooring, did paint, fixtures, did a bunch of stuff, just working these long hours. And it was really fun because that was another senior park. And I loved doing it because all the neighbors neighbors love seeing when you're working on stuff. And so it would just be all these like retired guys coming by being like, what are you doing? Yeah, that looks good. I have a better saw for that. I'll go grab it for you. And they would just like hang out with us and help. It was adorable. So we had to figure out a bunch of stuff on that, like on the fly, basically, like YouTube videos as we're doing it.
I'm surprised there wasn't like an old grandpa there, like maybe in his like 60s that like is pretty handy, just because like, hey, like, can I just help you guys? Like, I kind of just want to feel accomplished or something, and help some young women out.
There kind of were, like, and it was adorable because sometimes, like, they weren't condescending at all. They thought it was so cool that these girls would show, because, like, I worked in a CPA firm. I'd show up in, like, a blazer and slacks, and then we would be, like, trying to take out drywall with our hand tools, and he was like, this is ridiculous. Let me go get you my miter saw. Like, okay, thanks.
Yeah.
So it was it was super heartwarming. So we got it done in the 30 days, just barely, learned a ton, like, learned how to do a ton of things. And ended up selling that one just for cash to the lady who bought it 2 hours after I did. Yeah.
That's amazing. So with all that work you had to do, I mean, did you really make much money? Because $17,000 feels a little bit tight.
That one was tight materials-wise, because I think the contractor had only been paid like $1,500 before we fired him. One of my favorite things of mobile homes is that they're little. So like we were able to do all new LVP flooring everywhere except the bathroom. And we found that on Craigslist. It was someone's remnants from doing a big house project because they had an extra 700 square feet or whatever it was of this one specific flooring that was enough for our little tiny 2-bedroom mobile home. So we were able to keep costs down with a lot of that. On the countertops, we refinished them with an epoxy kit instead of replacing them. We painted all the cabinets and things like that. The other weird thing with mobile homes is the sizing is weird on everything. So like your doors, your windows, your closet doors aren't always like standard size. So we had closet doors that they had the person who lived there did some wacky stuff. They had glued like craft store mirrors all over the doors. And again, everything's made of like a cardboard almost. It's like a cardboard drywall hybrid. So taking them off, it like tore apart these doors. Yeah, we couldn't buy new ones. They didn't make them in the right size for this opening. And then we found that there's actually places in most cities that are like a mobile home parts junkyard. It's like secondhand, like doors, windows, furnishings, like parts for mobile homes. So if you look at doing these, look into one of those because that's where you'll find stuff really affordably and the right size for all your weird openings that aren't standard size. So,
okay. Yeah. So at some point, I imagine you graduated to a house, right? But how long did it take you to get to that place?
Yeah, so it took me, so what happened in between was I started a tax firm, which I don't recommend for your real estate journey. It's kind of a pretty big detour because it's pretty time intensive. So flipped mobile homes. And then in 2018, I moved to Charlotte. And then this is actually where I bought my first primary. And then my first midterm rental was here in Charlotte just a couple years ago. So there was a few years in between where it was sort of focusing on building my main business before I could circle back to the real estate side of things. And that's kind of where I am now.
So what gave you the confidence from working that W-2 job in a tax arm to then starting your own thing? Like, were you confident in real estate and that was what got you there? Or was it just like, did you have savings or?
That was exactly it. So it wasn't even like a long-term plan, like, 5 years in, I'm going to start a firm. I just ended up really, really specialized in real estate. I was bringing in a ton of clients who were investors. Most of the work I was doing was with investors. So it's a lot easier to become an expert when you're working in this area of something. It's like, going to a cardiologist versus a GP. Like you're only working in this one very specific area. So I became really confident in real estate and I realized I could add more value to clients by having kind of more flexibility to work with them in a way that made sense versus trying to squeeze them into a firm that worked with every type of business client.
Okay, can you explain what an EA is? Because I am just blown away, but I only learned about that a couple days ago. And so I was like, what? There's others than CPA? I mean, I know there's tax preparers, but EAs, from what I just learned a little bit on the internet, they specialize in real estate, right? And they're cheaper generally than CPAs.
So they specialize in tax is kind of the biggest difference. CPAs is a really, really broad designation. So that's what I was going to do first, actually. So I went to school for 5 years so I could take the CPA exam. But it's a really time-intensive exam. And the only thing it legally qualifies you to do is work in the audit side, like sign audited public financials for publicly traded companies. And I don't work in audit at all. I only do tax. An EA exam, you're licensed through the IRS, and the whole exam, the whole licensing, everything is wrapped into tax specifically, whereas the CPA is also some economics, it's auditing, and most tax people never work in audit. They're this is apples and oranges. So the EA exam is just much more specialized. They tend to be tax specific, and they tend to do representation work. So if you as a taxpayer ever are being audited by the IRS or you have to defend something, typically EAs do that more than CPAs. They work with the IRS more. They defend taxpayers. Some are lower price, but not all. It's really specialty dependent. So if someone's kind of real general, small, they work with just personal tax returns, that might be more affordable. But there's a across the board pricing kind of with every type of credential. It's just dependent on really what they offer and their skill set.
Great. I'm curious about what got you into taxes, because taxes to me are the worst thing that we have. And so for someone to be oh my gosh, I love them so much, I just can't even imagine that.
Yeah. So the way it like started was I was in college just for business. I just knew I wanted to do something entrepreneurial. I always loved finance and business and anything with numbers. And in my accounting class, the professor literally walked up to the dry erase board on the first day of class, and he wrote the starting salary of someone with a business degree versus someone with an accounting degree. And I said, oh, well, I can do accounting. That sounds better. And again, it's just because you have that specialized knowledge versus a whole general degree. So that was the initial start for me of sort of what geared me towards it. And then I found that I really like it because everyone thinks tax is like numbers, that like we just do math all day. And it's almost no math. It's laws. It's like knowing laws just about money, like it's money laws. So a lot of what it is really just like knowing how to read and interpret tax laws. And then for me, what I like about it is that it's like a puzzle, right? Like the better I learn this, it keeps people from spending more money or like saves them money. So it feels like a puzzle with a monetary prize at the end. It's really exciting for me. Yeah.
Yeah, I could tell that you're just like getting off on taxes right now, which is like crazy because that is something that not a lot of people, are passionate about. But I will add to what you just said, and I thought you were going a different route with like what your teacher put on the board. But like if I was a teacher and putting stuff on the board, I would put like, what people spend the most money on, right? And people would probably think, oh, housing, oh, cars, oh, food. But actually what's above all of them is taxes. Taxes is what Americans spend the most money on, but you don't notice it because it comes out of your paycheck or if you're a 1099 or whatever, you're going to pay at the end of the year. And me and Z are probably like squeezing our cheeks right now because April's coming and, we're both 1099. And so,
I'm not
I
paying
think
taxes this year.
Yeah, me neither. But like a lot of people,
I know.
a lot of, anyway, but yeah, so a good like a good tax person in your court is so good. And I've worked with multiple CPAs, and not to say that CPAs don't know what they're doing, but I will say I also listen to a lot of podcasts and like pretty much every way to save on real estate. Like I feel like I legitimately, no joke, I taught my CPA that I could do a cost segregation on a single family home. Like I shouldn't be teaching my CPA that, right? And so now I now work with an EA, and she's awesome, and it's just the breadth of what you can do is just incredible. So sorry, I'm rooting for your business
On his soapbox here.
Yeah, sorry, it's so true. But so clearly, like you saw that that kind of niche, and so you do 2 years of doing that, right? And then so you need to do 2 years of doing that, right, in order to qualify for the next house. Is that why it took you 2 years, or did that just kind of work out in its own way?
Yeah, well, it was a combination because now I was self-employed, so I had to wait for 2 years of self-employed tax returns. And then I laughed because I started a tax firm the same time as like the Tax Cuts and Jobs Act, which was the biggest tax overhaul we'd had since I think like Reagan was in office. And I was like, oh, awesome timing for me. Like super good job, Natalie, starting to do this on your own the year the rules are all changing. Like excellent. So it was just time intensive. Like running any business takes a lot of time. And so trying to focus on real estate and focus on that, I kind of had to pick a side to focus my attention on for a little while. So focused on building my business so that I could get things stabilized, get systems in place, and then could kind of turn back to real estate. But the whole time I was working with investors. So now I also have like a really great network, and I've learned a ton from my clients and vice versa along the way. So it's been kind of a good, it's a really good overlap to know tax and real estate.
Totally. And so why don't we get into kind of like what your next deal looks like, that 2016, 2017 deal when you start investing in actual houses?
Yeah, so the next thing I bought was a primary home in the Huntersville, North Carolina, so just outside of Charlotte. And it took me, I think it was about 18 months of looking for something that had rent potential with a second unit. And so I ended up finding like a unicorn. It's in a perfect quiet neighborhood. It had a fully built on mother-in-law suite that they had already furnished and been renting on Airbnb. So it made it really easy because I knew, like, they literally gave me the report, so I knew a minimum of what it could rent for. I knew exactly what the numbers were. I wasn't trying to like estimate it. It made things really easy. So I literally just paid like $3,000 over ask, and people at the time were like, "That's crazy, Natalie." And I was like, "Worth it, like 100% worth it. This is so hard to find, and I've not found one since in this market." that was just turnkey with an apartment. So from day one, I got to live in a beautiful 4-bedroom house for free with this mother-in-law apartment. And probably about a year ago, almost a year ago now, I converted that to a midterm rental, actually. So that's actually where I first saw you, was at Bigger Pockets. And I was like, yes, I knew I was doing a good thing. This is something.
That's awesome to hear. So what made you want to do it as a midterm rental? Did the laws change in the town and you had to, or is it just something that you found on your own?
For me, it just made more sense because it was an apartment, not like a whole house. I was pretty consistently booked on Airbnb, but there would be weird little pockets where I was vacant and this and that. When I kind of ran the numbers between the extra work of kind of having to keep track of that many more people in and out, the turnovers and having to schedule cleaners, and then, like I said, those weird little pockets of vacancy, I was like, I'm going to make the same amount of money, if not a little bit more, doing it as a midterm rental with a fraction of the headache. And that was the biggest thing for me. Like, I'm busy, I run a business, and so anything that can be more simplified in my life, I'm all about. So the idea of having 4 turnovers a year instead of 40, I was sold. So when I ran the numbers and it worked out, I was like, yeah, we're gonna do this. So it's been going really well.
I agree. So how do you market that place? Are you just still using Airbnb, or are you using some other websites?
Yeah, so I typically am on Furnish Finder. That's sort of my meat and potatoes. I was so leery. I'm an accountant, right? So like I love following rules, and like anything risky makes me like nervous. So people are like, oh, you can also still have it on Airbnb. Like they do 30-day stays now. And I'm like, well, but if someone wants to book through Airbnb and I have a lease with them, doesn't one supersede the other? Doesn't this cause problems? And then after enough people were like, Natalie, it's fine. You can just put it on Airbnb, just get it another place. So I list it both places. And then I've actually had really good luck with a lot of the travel professional Facebook groups, like where people are looking for properties and you can list yours. I've gotten really good leads from that. And that's actually where I picked where I'm currently looking for like my next midterm purchase, was based on those groups, based on where in North Carolina I was seeing an influx of traveling professionals looking for housing versus like there's certain cities you'll see where someone asks and there's like 50 responses. Like everyone has a midterm rental in that city. And then there's cities where someone posts and there's nothing, crickets. And so I found the cricket city of North Carolina, and that's where I'm currently looking for a condo.
How do you find these cricket cities?
I was just keeping an eye on the Facebook group. Like I was just looking at, I had an alert set up for North Carolina just in general. And so I was just kind of, after a couple months of keeping an eye on, like I said, where there was a posting where someone was like, I'm trying to find anything in this city at all, and no one had available listings.
And so in your buying, sorry, I may have missed this, but did you buy this as a house hack, like with low percent down, or did you go ahead and do 20%?
The first one I bought as a house hack. I did 5 so that I could refinance out of PMI because I knew that I was going to be able to pretty quickly. But yeah, that was how I bought it, was just 5% down on that first one with the mother-in-law apartment.
Super cool. Super cool. And so you like the medium term plan. It sounds like you kind of did that before it was like kind of mainstream. I feel like it's getting to be a little bit mainstream these days. Like
it was like right when it happened.
Here were yeah, like
sorry, I ruined it for everybody.
Yeah. And so I guess curious, both of you guys, actually, I've been hearing like whisperings out there that both the medium term and the short term like rentals are kind of like, like they're not as sexy as maybe they were like 6 months ago. Like maybe it's oversaturation, maybe it's kind of a, less supply and demand, maybe it's just a time of the year. But are you guys seeing that at all, or is it just kind of the rumblings that I'm hearing from certain people?
I know I saw it a little bit with my last turnover, but that was literally December, I think 17th is when the last people moved out. So it was right before Christmas too. But it was sort of a trickling of applications versus the time before. It was like 25 the day I put it up. So I don't know what to attribute it to.
Yeah, I would say for me too, it's the slowest winter I've probably seen. I mean, aside from just COVID times, that was really, really slow. But in 10 years or 11 years of doing this, it just feels really slow right now. But Bigger Pockets put out an episode about short-term rentals recently, and they had someone from AirDNA on there to do analytics and talk about just data. And it was really interesting. It seems like travel is still ticking up and that there's people still traveling. I thought it was like a recession thing. But we also have China is not open right now. I don't know when this podcast comes out, but China will be reopening to travel outside of the country. And they formerly had been like 28% of US travelers. So people that travel to the US. So I think there's going to be a huge like boom once China opens up of pent up travel, because that's basically what we had in 2021. It was just like a pent up COVID travel boom. So I think there's a big wave coming. So if we can ride out this cold winter, I think we'll be okay.
Interesting. Yeah. It's funny.
Yeah.
It does seem to like kind of come. That's Airbnb though, right? It's funny. I got a text today from like a past client of ours that's like, "This is my first month of negative cash flow on my Airbnb. This feels like an emergency. We need to talk." And I was like, "You signed
You're
up
like,
for
wait,
this,
how is
man."
that your problem?
Yeah. Well, no. I mean, I'm all about helping people, right? So I'll give them a call later
Yeah.
today and kind of ease them a little bit. I'm like, I talked to Zeona, and this is what she said.
Oh,
and
good.
so-
Have them listen to that Bigger Pockets episode. Yeah.
Yeah, I will. And so, yeah, no, that's interesting, right? But that's what you are. Like when you sign up for Airbnb and when you sign up for the short-term stuff, like it is a little bit more like up and down, but overall, you're coming out ahead. And so you're just signing up for that volatility.
Absolutely.
So Natalie, I guess, let's fast forward a little bit into like today. Like what does your portfolio look like today? What does your tax business look like today? How does all that looking?
Yeah, portfolio. I'm just now on the search for the next property. Like we're just now like actively looking again. So that's where I'm looking, is just like 3 hours east of me. In Greenville, North Carolina is where I'm currently looking for another midterm rental.
You just spill the beans?
I know, I did.
She
I
did
shared
spill
it, so
the beans.
hopefully too many people don't
I've
go
heard
there.
good things about
No.
that.
It's okay.
Yeah,
There's
no,
a
it's
Greenville, South
blowing
Carolina,
up.
and a Greenville, North Carolina. So people, I'll let them get confused with
Decide
that
which
because
one.
everyone does.
Yeah.
Yeah, exactly. And then the tax business is great. I keep a boutique firm, basically like a smaller client base. And then the big change for me this year is I'm doing a lot more on the education side, which I love. Like you saw me get hyped up about talking about taxes, and like not everyone does that. So like someone should pay me for that excitement because it's rare. So
Yeah.
now what I do is a lot more of the teaching. So presenting at tax conferences, teaching, like you have to take classes each year to keep your CPA or your EA license. So I'm out here teaching more professionals how to do real estate tax stuff because there's a gap in the industry. So I'm really liking that part because it helps me bring a little bit of real estate into their world, because I can't tell you how often I see posts where CPAs are panicking online because they're like, my client told me they bought a rental, but the mortgage, the 1098's not in their name, and this has to be a scam, and they're freaking out. And I have to be like, this is okay. It's a subject to deal. This is a thing. People do it. You don't have to panic. Don't send them to jail. This is fine. It's totally normal. But when an accountant doesn't know real estate, they don't know what's happening. They don't know what you're doing.
Yeah.
So it's really fun to be this sort of bridge. And so I really like the education side. So that's kind of where I'm expanding to quite a bit in this upcoming year.
So now you're actually teaching accountants and you're teaching CPAs. Is that right?
Mm-hmm. Yep.
Very cool. Very cool. And so I guess give us. I want like maybe like a 2-minute answer. Okay, I've got like a 2-part question for you. I mean, you may have answered this in the beginning, but I just want it to be super clear. So why would somebody pick and go with an EA over a CPA, like in terms of real estate?
I mean, for what it's worth, I wouldn't pick based on the credential at all. Like, at all. They're both just a test, right? Like, we all knew that kid in high school who was, like, really good at taking tests, but they had no sense. Like, that exists in the real world, too. So, like, because someone passed a test doesn't make them an expert at either thing. And I'm working on actually a real estate tax credential so that there can be a way to prove that. But until that's finalized, what I would say is don't pick based on credential. Pick based on who is most knowledgeable and best fits your need. So some accountants work fully virtual. So if you travel a lot or you like online, that's great. Some are in person. Some are really real estate specialized. Some aren't. And depending on if this is like what you're going full bore into, or if you're like, oh, I own a restaurant, that's my main business, but I have a couple rentals. Like, find someone who is really, really, really good at the thing that makes you the most money. And that's who you want to work with.
I love that. Pick the person, not the credential. Z.
Yep. 100%. Yeah.
And I think it's important to be informed as the investor and as the person getting our taxes prepared. So are there a couple of like tricks or tips that you would give someone to go to their CPA or to their EA and say, hey, are we doing X, Y, and Z?
Yes. So, shameless cross ploy. Hopefully this doesn't get me in trouble, but I just released a video with Mindy. It came out yesterday. That was like a year-end tax checklist of like what to bring to your accountant, what things will help save you money on your tax prep. So I would say like if you Google me, that should come up and you can watch that as a great starting point. But then what was the other part of your question? Like what to prepare and
Just, yeah, what things to tell them. Like, I know when I learned about cost segregation, that like changed my whole world. I had a CPA the year before who made me, I mean, she did all her tricks and I still had to pay like $50K. And then the CPA the next year that I moved to, he was like, oh, you're not going to have to pay taxes for like 3 years because you have so many properties and we're going to do cost segregation. And so I was like, what the hell? You know, it's just funny that that's not obvious. So I think there's sometimes good for people to be like armored with a little bit of knowledge on their own.
Yeah, absolutely. So I would say the first step is just knowing that there's kind of there's a difference between a tax preparer and a tax like strategist or tax planner. And so your normal tax just like prep work, if you just see your person once a year, drop off some forms and talk to them for 20 minutes, they're much less likely to come to you proactively with that stuff. Like they're not even thinking about it. They're just cranking out returns. They're going to take your rental information, put it on the form, move on. If you're working with a planner, someone you're meeting with throughout the year, that's when you sort of like, oh, look at this. This is all you do. You're a real estate professional. We can do something with this. So it's sort of that like they have time to step back and breathe. Either way, I would say the biggest things to kind of bring up to your accountant to sort of see if you can spark a like aha moment. And if they look at you like you have a third eye, like go just get out of there, get your forms and just find someone else. Because if they have no idea about these things, like it's one thing to be like, hey, I heard about this, and to have them sort of go, oh yeah, it's another if they're like, never heard of that, sounds fake, or like have no idea what you mean. So the biggest things, what I would say, asking them if you're able to use your rental losses on short-term rentals and how. So there's a tax loophole tied into short-term rentals where if the average stay is under 7 days and you materially participate, typically we can use the loss regardless of your income level. There's no limits. This is, I don't want to say it's new, but short-term rentals are pretty new in the big picture. So tax people who haven't really taken education in the last 5 years probably haven't heard of this. So that's always sort of one of my big, like, ask them about this. And if they have no idea or say no way, like, doesn't count, you should probably look for a different option.
Okay, so that's like a pretty big tip, especially with a lot of people going into short-term rental space, right? And if you do make over, I don't know if the threshold is 150,000, like the other like thing, but what are some other, like, maybe give us like 2 of your favorite like tips to see like the lowest hanging fruit of, oh, you're a real estate investor, are you doing this or this? Because you could be saving a ton of taxes.
Yeah, so the short-term rental tip's the big one. If you have a short-term rental and your average stay is under 7 days, ask about this. The flip side to that is if you have a short-term rental and it's reported on Schedule C of your taxes, which is where you report a business, Schedule E is for rentals, C is for businesses, there's a good chance it's wrong. They only go on Schedule C if you're also providing substantial services, which is more like a hotel. Like if you're cleaning daily, if you're offering meals, then you're over there. And if you're on Schedule C, it's going to pay self-employment tax. It's an extra 15% tax. But if you just have a run-of-the-mill Airbnb and you just only clean it in between guests, it should still be on Schedule E. So look at your tax returns right now. If you have an Airbnb and it's on Schedule C, circle back and ask about that because it could have caused you to pay extra tax. So that's kind of those 2 things tied into short-term rentals are always worth looking at. And then probably the other big low-hanging fruit that I see missed a lot is if you're doing renovations at all, if on your depreciation schedule, which is where you write off the value of your house across multiple years, anything big, anything that's going to have a use for several years, you get to write off only a little bit of its cost each year. We have to like spread it out. So your tax return should have a depreciation schedule. It's a horizontal sheet. So you always want to look at this. And one of the things is if you do a renovation, if you see it as a big lump sum number, like if you spent $100,000 updating a house and you just see $100,000 listed as renovation and it's written off across 27 years, there's often parts of a renovation that are items that could be written off over a shorter life, which would give you a much bigger write-off. this is what a cost segregation does basically, but a cost segregation applies it to your starting point, what you paid for the whole unit. But if you then swap out pieces, like if you put in new appliances or you put in new flooring, like that stuff you can write off over 5 or 7 years instead of 27. So the annual write-off is much bigger. And anything with a life of under 20 years qualifies for bonus depreciation, which means potentially you can just write it all off at once. So if you ever see a big lump sum item for a renovation, ask your accountant about it. Ask if there's any parts of the renovation you can separate out and potentially write off over a shorter life.
Yeah, well, this is gold. I love it.
It is such
these
gold.
are so valuable. Yeah.
And at the same time, it's like it's taxes. So there's a little bit of that like Charlie Brown's teacher where it's like, meh, 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 meh. I don't know. It's so intense. I just can't stay on task with the taxes. Yeah. But that's okay. Somebody got a lot out of that. And I was listening.
If you have to rewind it again, because there were three really big golden nuggets that Natalie just said in there. That could literally save you tens, if not hundreds of thousands of dollars, depending on what your income levels
100%.
are. And so definitely this episode in itself could be worth lots of money for you. Z, go ahead.
So I'm curious, looking forward, what kind of plans do you have for your portfolio? Because usually people have goals around it. Are you thinking, it looks like you're looking again for another midterm rental. Did you end up buying one in this mystery town and then you're looking again in that town?
I just started looking there. So I just found it probably 2 months ago. And so that's where I'm currently looking to buy as soon as something that kind of fits perfectly comes up, or something that I think it was a little, the past 2 months have been a little weird with interest rates and everything else. So I wanted to kind of give it a sec, see what happened. But that's my goal for this year, is to acquire at least one other midterm rental. And then the kind of bigger goals are on the real estate and education side. But acquiring at least one more property this year is sort of the plan.
Great. And then what kind of size are you looking for? Because people talk about this all the time with midterm rentals, is debating, should I get multi-unit? Should I have 1 or 2 bedrooms? Should I get single family home, make it really big? So what are your plans for this one?
So what I am currently looking at is small. I like small. It's what I have now, and I feel like it's affordable. I think it's ideal for traveling professionals. And so what I am looking for is either little houses that a lot of people ignore, and the price per square foot is kind of high, but I think, and I've seen this on Airbnb too, because it's what I would rent, is like if I'm traveling, I will always rent a super cute, like well done 800 square foot house if it's just like I'm going with my partner, versus like I don't need a 1,500, 2,000 square foot house with 2 extra bedrooms you're not going to use. So like a 2-bedroom house that I think a lot of investors just ignore because it's only a 2-1, or even condos, depending on the condos. Condos are always sort of a hit or miss topic for people. I've had some clients who are like, I love condos, they're my best investments. But I think the key is like looking over their bylaws, looking over their financials, making sure you're not going to have a crazy assessment in the next year or two. So that's kind of what I'm looking at, is 1 or 2 bedroom condos, or just like under 1,000 square foot single family homes.
Love it. I own all of those things. Yeah.
Do you have a preference?
Yeah, it's interesting because for me now, I'm looking for big homes because I think there's just less competition in the space. But, to each their own. But I've owned over, my history in real estate, a few 1-bedroom homes, which is funny. But they exist, just old homes. And then one of them, we finish out the basement, and that's kind of a 2-bedroom. But it's, interesting little guys. Yeah.
I love that.
Yeah. And so, okay, one question, and it might be like I feel like I'm not like anti short-term rental, but I'm always a little bit more skeptical than everybody else, I think. And so like, what happens if like my only concern about 2-1s, because we were looking at a 2-1 up here in Coeur d'Alene that Grace, my wife, really liked, and we were going to short-term or medium-term rent it. But why I kept having reserves about it was that if for some reason short-term rentals or medium-term rentals don't work, like this thing is not cash flowing and it's not renting out as a 2-1 and like going to make us any money. It's going to be a money suck. And so are you able to buy something that is a 2-1 that would also work as a long-term, or like that there's a plan B for it?
So for me, I think there is, but for me, where I see this having a appeal is for younger renters. Like I think a lot of people out of college aren't buying their own homes right now, aren't able to, and a lot of people are sort of aging out of wanting roommates. And so like I know a lot of friends or have a lot of friends who would rather rent something small and have it be just them than something with roommates, even if it's bigger or more affordable. Like that's sort of so I think there still is a demand, especially if you're near like tech jobs or like a finance industry or somewhere where there's kind of people right out of college. I think they'll pay a premium for like a really nicely done small dwelling. And some people get burned out on apartments. Some people are tired of neighbors and stomping. So I think if you have a 2-bedroom house, but it's really cute and it's in a good location, I think there's still going to be a demand for it. That's sort of been my plan.
I agree. And I will say that furnishing a 4-bedroom house, because I'm doing it right now, is a beast. It is so much work. It's just so much furniture. So, yeah.
Yep.
All right, Z, I think it's about that time to head into the final part of our show, which is the Final Four.
The Final Four.
Before we get there, Natalie, do you have any parting words of wisdom for the listeners?
My parting words of wisdom would be start gathering. I don't know when this will come out, but it's like at any time. Start gathering your tax information now. Please do not call on April 13th. They will not be happy. So like get a head start on it. You're already late. Just do something. Do something today to get your taxes in order.
Sounds
Love
good.
All right, Z, kick us off.
All right, Natalie, what are you reading right now?
You know, shameless ploy, but I've got 2 things I'm reading right now. 30 Day Stay, and then Published, which is
Nice.
which is
Are you gonna
about
write a book?
publishing your first book. I'm hoping to. So that's another one of the goals for the upcoming year. Yeah.
Nice.
That's exciting.
It's not as
Yeah,
hard
I
as
read
you
that book too.
think.
She says as I'm holding
Sharing
the
their
book,
boat
she's
makes
like,
it sound
look.
really easy.
Yeah.
Yeah.
all
Well, Craig
right, Natalie.
also told me it was easy, and then it was. Thanks, Craig.
You're welcome. It is pretty easy. You just got to be consistent with it.
Yeah.
Yep.
Natalie, question number 2. What is the best piece of advice you've ever received?
I think the best advice I've ever received is make sure you're never the smartest person you know. I think that goes severely underrated. I think people get really complacent easily and like feels good for your ego to be the person everyone asks questions to. But like you should have questions. There should be someone bigger than you to learn from at all times.
Absolutely. Love that.
Yeah. I like that too. It's making me think. All right. Question number 3. What is your why?
For me, my why is really just having my time back and having the freedom. And I think a ton of people say that and it's pretty vague, but getting into tax, this is an industry where you'll see people like work themselves crazy hours and work themselves into the ground. And I knew really early on that I didn't want that. So the why for me was getting to work in a career I love in an industry I love without that lifestyle. So that's sort of where the passive income in real estate came in for me.
So how long do you plan to have your tax arm open for? Are you going to retire at like 45 or?
It'll be a while. I never want to be like, oh, I'm on the hard path to fire, because my clients will be like, what the hell, Natalie? Like, we just got here.
Yeah.
So it probably won't be that quick, but that's why I don't have a firm with like 1,000 clients. I never wanted the kind of job that was going to require me to work 40 hours a week. Like it's so hard to manage that scale of things. So a small client base that I really like working with and where it's virtual, so I can be traveling. I can be in another country and still work with my clients. So there's not a hard retirement date in sight.
Love it. Love it. Okay, last question. What would be the funniest name for an accounting firm?
Ooh, so my last name, as we obviously came across, is pretty tricky. And then one of my good friends, his last name is Hottenrot, and it's like 40 syllables, like 40 letters when you see it written out. And we joked that we should merge and just call it like 2 accountants you can't pronounce firm, or like 2 tax pros whose names you don't know LLC, pretty much, because we both run into that where people just call us and like mumble our last name. Like I get, oh, is this Natalie Kolodij? Like they just sort of take a general case out and mumble off.
I love that. 2 accountants where you don't know the name. That's the new, I'll be looking out for that.
Bad names, good accountants. Yeah, exactly.
Yeah, bad names, good accountants. Okay, Natalie, where can people find out more about you?
Yeah, so you can find me and find information on me on the website. I'm just at kolodtax.com. Or you can find me on Instagram. It's probably where I'm most active at RE Tax Strategist. There's just underscores between them. But I'm RE Tax Strategist or Real Estate Tax Strategist on most social.
Awesome.
Love
We'll
it.
definitely go follow Natalie for your tax tips. This time of year is a good time of year. It's coming up. The deadline is coming up.
Yes.
Natalie, thank you so much for coming on and sharing everything, sharing your story, and sharing some really good gold nuggets. And yeah, we really value your time here. So thank you so much.
Okay. Thank you guys for having me. It was fun.
Yay. Okay, we'll talk to you soon. And that was Natalie Kolodij. Natalie Kolodij. Z, what do you think of Natalie?
Yeah. So one thing I learned, which I really loved, is how she found her mystery market. But it was really cool that she said, I was talking to different nurses. I was looking on the little nurse forums and on Facebook, and she was saying it just seemed like this one market kept coming up and nobody could find places there. I thought that was just really smart because everyone is trying to find the next place, the next big thing, the next opportunity. And there's so many people in the short and midterm rental game that sometimes the competition just feels overwhelming. So I thought that was really, really smart.
You know what's interesting? I feel like a lot of people, what their mind goes to is that when you're looking for a midterm rental, you want to go and see that there are other midterm rentals there on the market because that means that like something's working if there's a lot of midterm rentals there, right? But no one kind of thinks about it from the opposite perspective of, well, maybe there's too many midterm rentals and none of them are actually getting booked. And so I think Natalie, it's kind of like, Z, you're kind of this way too, where like it kind of takes some cojones to be like a trailblazer, but it certainly pays. Like there's some risk to it, but it pays. And like you with the medium term space and the short term space and now the medium term space, like there's something to that, to being this thing like, oh, hey, this is going to work. This is going to be big. I want to be the first one to do it. I feel like I'm a little more conservative. And so, yeah,
It's okay, Craig.
really exciting.
We'll bring you along.
Yeah, bring me along for the ride. I'll talk about getting into it and get really excited about it. And then right when it's about time to pull the trigger, I'll just decide to go back to my own ways.
Yeah, you'll just buy another long-term rental. That's basically what happened this last time, but that's okay.
Yep, and every other time. But yeah, so Z, anything else you want to add about Natalie or anything like that?
Well, I think there were some great tips there, and sometimes tax stuff's just hard to digest. So go back and listen to this podcast a couple times, or just write down some notes around those 3 things that she said to go talk to your CPA about. And if you need a good recommendation for a CPA, we both have people that we can recommend. So just reach out to us on Instagram. I'm at Zeona McIntyre, and you are?
The Fi Guy.
Yeah. And we would love to chat with you. And then the last thing, if we can ask for a favor, we ask for this all the time, but if you're finally listening to the end, then maybe this is new for you. If you could leave us a rating and review on iTunes is a great place, but anywhere that you listen to your podcasts, that would help us a lot. So please do that and share our show with your friends.
Awesome.
And we will see ya next week.
See you guys.
That's it for this episode of Investify. We hope that these nuggets of real estate wisdom lead to more savvy financial planning and a clearer path towards financial freedom. For more content like this, subscribe to the show at investify.com. Don't forget to leave a rating and share it with your friends. Together, we can transform more real estate newbies into successful and clever investors. Thank you so much for listening. See you on the next one.